Good afternoon, this is Tom Asper with the Viper Report. It's Monday, November 4th. Another great week for stocks last week, and it got the media's attention finally as the major averages, all except the Dow, made further new all-time highs. That was not surprising for those who follow the AD line analysis, as frequently the AD line will make a new high well ahead of prices and will get you on the right side of the market. Back at the start of the year, in early February, this is the NASDAQ 100 AD line. It made a new high, even though the QQQ, which is on the top of the chart, was trading around 167, and the all-time high was 185. So it was still over 10% below the highs, but this action early in the year was very bullish for the stocks. Remember, the QQQ tracks the NASDAQ 100, primarily tech and biotech companies, and this is the AD line, which I follow on a daily, weekly, and monthly basis. As I pointed out in one of the articles this weekend for Forbes, the monthly AD line has been positive since early in 2016. I'll share a link to the article and you can see the chart. So the best time to trade stocks are when you have the AD line well above its moving average. That was the case up until the middle of April, when I commented in Forbes that the market was looking stretched and was ready to correct. We had a pretty decent correction going in through May, but the AD line turned around on the first week of June, signaling that the worst of the selling was over. Later that month, it broke through its prior high, as indicated by the zero, moved to a new high, and that was a bullish sign for the rally that lasted into July. You can see oftentimes that these resistance levels, once they are overcome, become support, and frequently the market comes back towards them, as it did in August. And then we had another breakout at the end of August, made another new high in early September. The market corrected right back into that support. So a few weeks ago in October, the AD line again broke out to the upside, indicating that the market would follow, and you can see up above we had just made a new high last week. Now, while Viper ETF traders bought the QQQ a couple weeks ago on a pullback, I'm often asked, well, if the QQQ and the SPY are at new highs, what's a new investor or trader to do? Well, even though the averages and the ETFs are at new highs, many stocks are not. This is a chart that shows the percentage of NASDAQ 100 stocks that are above their 100-day moving average. You can see back in July, it peaked out at 85% and started to diverge here. That was a sign of the correction that we got in late July and early August. Right now, only 65% of the NASDAQ 100 stocks, or roughly 65 out of that 100, are above their 100-day moving average. That means there are 35 that are not. This means there are plenty of opportunities in stocks, especially those that have already reported earnings. This is what this morning's Viper Hot Stocks report looked like. Each issue of both publications include this table where I give the closing value of the SPY, the QQQ, the IWM, that follows the small caps, the DIA, which follows the Dow Industrials, and the NYSE Composite. Their quarterly pivots, their 20-day moving average, 20-week moving averages, and their AD line analysis. You can see both weekly and daily are positive. The daily have been positive since October 10th. Also, I analyzed for support levels. So support, for example, the QQQ is 2.5% below the close. So that means it's possible you could see a 2.5% pullback. And there's resistance around 3% above it. This chart of the Spider Trust shows the positive signal from the AD lines and the on-balance volume in early 2016. As you remember back then, in January, people thought we were starting a new recession. But it was a great run for the last half of 2016 and all of 2017, as stocks did not correct until early 2018. The AD line is still positive, shows no signs of a top. Remember the start of the last bear market in the fall of 2007, it turned negative. So each Monday edition of the Viper Hot Stocks includes the scan results. These are all the stocks that are on the buy list, as well as doji buy and sell signals, and we get into specific recommendations. Ameris Bancorp, ABCB, is a stock we bought a couple weeks ago, right near before this last rally at around 41.25. Now we're looking to add to that position since the technical studies look very bullish. You can see the relative performance measures how the stock is doing vis-a-vis the S&P 500 broke out, as did the on-balance volume. Curtiss-Wright was one of last week's earnings winners. It reported earnings on the 31st. We'd recommended it the week before at a nice low level and had an order in to sell, taking about an 8% profit on the long side in just over a week. One of my clients called me and said his 200 shares effort had paid for the Viper Hot Stocks report for well over a year. Over the past several weeks, we've been long a couple of different REITs. Their interest-bearing, which has been the hot sector. Their store, we bought it at $37.86, sold at $40.63. We're still in ELS and in Healthcare Realty Trust, which just broke out to the upside last week. For both the Viper ETF and the Viper Hot Stocks report, we do send out special updates. And this week in particular, I'll be sending out updates in the Viper Hot Stocks report, as there are a couple of stocks I like technically that were reporting earnings either tomorrow or Wednesday, and I'm looking for a pullback on earnings to create a good buying opportunity. If you're interested in getting involved in stocks or ETFs, I hope you consider either the Viper Hot Stocks or the Viper ETF report. If you go to viperreport.com, you can click on one of these links and it'll give you the sign up information. Each is only $34.95 a month. You get 2 reports, specific recommendations, as well as profit taking levels twice each week, and you can cancel online at any time. I should have an update in the middle of the week to appraise you of the market action and let you know what I'm looking at then. Thank you very much.